Good afternoon, everyone. So wherever you are, welcome to our webinar. This is a conversational one. We have 4 great guests, and we're just going to go through them, chatting about how the land lies now that we've got through Christmas, another COVID lockdown, and Brexit has happened. So let's have a chat. So I'm joined in the non-existent studio today from around the globe, 4 lovely people. We have Robin, CEO at the Watch Shop. We have Matthew from Loqate GBG, Ilko from Nuve, and Kevin from Klarna. Most people making a welcome return, so pleased to have them. Before we do the introductions, just the usual housekeeping, really. So we're all now Zoom experts, so I don't need to tell you how it works. The only things I will point out are that we're recording this. So I don't know if a courier arrives, you have to go to the door. Don't worry, you'll get a copy of the recording. If you want to ask any questions at all, the Q&A is open. So I refer you to the bar at the bottom, click on Q&A. You can see and ask the questions. I'll try and answer them as we go through. I will be keeping an eye on them. Any great ones we don't manage to get to now, don't worry, we'll answer them in the follow-up email. So I think that's all. Let's just say a quick hello and get an intro from all of our panelists. So starting with Robin, then Matthew, Ilko and Kevin, just tell us who you are and where you're from.
Thanks, Ian. So Robin Phillips, I'm the CEO of Watch Shop. Been here for 2.5 years now. We're a pure play. We're the #1 in the category in the UK, and we're also in Europe too. Formerly, as you'll be familiar with, Ian, John Lewis, Waitrose, Boots, Kurt Geiger. So it's in a variety of different verticals, but I'm quite enjoying running my own train set this time around.
Excellent. Well, we look forward to hearing more about that. Matt.
Hi, yeah, Matt Furneaux, Commercial Director at Loqate. I've worked about the last 20-something years in and around location technology, and I lead on e-commerce for Loqate.
Can you actually say in and around, or shouldn't you say precisely in location, not plus or minus
we'll come back
10 meters? Good. Ilko, welcome. Tell us who you are.
Thank you, Ian. Ilko Dettingmeijer. I am the Senior Vice President for Sales and Partnerships in Nuve. I recently joined Nuve, so as of December 1st, 2020. But I've been active and working in the payment ecosystem for the past 10 years, the majority of which was in WorldPay, where I had numerous different commercial roles, and my last role was heading up all the commercial activities in the retail space.
Great. And Ilko, you're joining us today from a snowy Belgium, is that right?
Snowy Belgium, yeah, very much
Excellent.
so. Very much
good,
so.
Good. Thanks for dialing in. Kevin, great to see you again. Just tell us who you are.
Thanks, Ian. So my name is Kevin Ward. I'm the UK Director for Partnerships. So essentially my role is to make sure that we are partnering with all of the PSPs, platforms, SIs, technology partners to aid our distribution at Klarna. And as you know, Klarna is the largest alternative payment method in the globe now. So, pleased to be here and really enjoyed the last couple of years' growth.
Excellent. Well, I mean, when you say growth, it is remarkable, because I can remember when you were just simply alternative with virtually no clients, and the explosion in the last couple of years is amazing. So we look forward to hearing from you later in the webinar, Kevin. So thank you very much. Good. So Robin, let's turn our focus to you. We last caught up with you before Christmas and had a good catch up. So we're very keen to get you back to understand how Christmas was. So maybe let's just dive straight in by just tell us how your Christmas was and the shape of your business, how it seems to consumers now as we are all locked up in our homes. So, how is the consumer seeing you, and how was trading?
Sure. Overall trading was very good. Peak traditionally started on Black Friday and went through to the 20th of December. But what we saw this year is that it got pulled forward quite a lot. So we started to see a significant increase in trade early October, and you can see that the market was basically running Black Friday deals from them. So October was very, very good. November was about where we expected it, and December a bit lower than we expected, or that we planned for anyway. And overall, there, I'd say the 3 months were as good as we could have hoped for. Interestingly, what we saw was a bit of spiking as the lockdowns happened and then were relaxed and then happened again. But I think a lot of customers decided to get in early and shop October, November rather than December this time.
And that earliness, was that driven by you hitting the discount and promotion button, or people just feeling they wanted to buy watches or gifting? What was the driver, do you think, for sales in that last quarter?
I think a bit of both. I think our competitors certainly launched their campaigns in October, and they certainly started to lead the market coming into Black Friday. I think in response to what they were seeing from the rest of the market, particularly Amazon, got in there quite early. We didn't try and lead the market at all. We were quite restrained this time around with our sales and our discounting messaging, because we felt that the demand would be there anyway. So we probably could have actually got more, but we wanted to preserve our margins and our spend on paid and social channels and focus more on profitability than just on pure volume this time around.
And how's the approach to I heard anyway, using the term self-gifting, people buying treats to themselves, I don't know, as a reward of surviving lockdown, or simply because they aren't spending as much on sandwiches and transport. Is this something that has solidified, or are we looking at a gifting for others market? How does the shape of the business look now?
Sure, we are a gifting business, but increasingly, and you can see this actually coming through, live chat's been very popular this time around, and we had a lot of new customers coming in, perhaps a slightly older demographic, but they were looking for advice as to what to get, both for themselves and for a partner. So the other thing that we saw was more multiple items in a basket, and people looking more for gifting suggestions. But certainly we saw customers treating themselves. Yeah.
Great. And is that something you think is going to carry on in 2021? So if you look at your targets the rest of the year, is it like last year up 20%, or is it a different shape to how you're expecting the year to pan out?
Well, that's $1 million question, isn't it? We've sort of guesstimated that physical retail will reopen at some point. We're a pure play, so we don't have any stores. So we're not predicting there'll be explosive growth yet again. What we are expecting is that there will be a step change into what's gone online, and that the online market will be bigger, and that we'll be able to drive a larger market share of that, because we do have the most compelling range, the biggest range, etc. So we are the go-to player in that market. I think it will be just a bit harder for people, particularly outside of the major conurbations, to get to a shop. But I expect my competitors, my multi-channel competitors, to up their game as well online. So I think there's the number of stores that are open will be less, and multi-channel competitors will have bigger websites because they'll have to.
And just describe your range for us before we go into some of the development things. So for people who aren't already watch aficionados, where do you fit in to the market? So
we don't compete with Watches of Switzerland or Goldsmiths. We don't sell Rolex or the super luxury brands. So I'd say that's sort of £5,000 plus for an item. We're a bit more down to earth than that. So our core customers probably is about 25 to 30. So pretty young, probably first or second job, probably not tied down yet. Bit of disposable cash to spend, like their brands, into fashion. And so our range of brands, they're world-class brands, they're big brands, but they are more at the fashion end of things. So our biggest sellers are Hugo Boss, Emporio Armani, Vivienne Westwood, Citizen, Casio, and the average order value is about £110, that sort of level. So we dominate the sub £500 watch market. So we do a lot of volume, sell about 400,000 items a year.
Wow.
So I sell an awful lot more than Watches of Switzerland, but their average order value is probably about £5,000.
But you did, so between that 110, £500 and the £5,000, is this an area that you're moving into? Or,
yeah, it is.
It sounds like a bit of an attractive gap.
It is. So in particular, what's in is obviously the smart and connected market is showing a lot of growth, as is the luxury market. And I'm defining luxury as over £500. So one of our biggest sellers at that point would be something like a Hamilton watch.
Right.
So kind of nice watch, automatic watch, lot of product quality in there, and got a good image. So smart is a big growth area for us, but we need to be a bit careful because there's not a lot of margin in selling Apple watches, so I'm not terribly interested in that. But
well,
performing,
just not.
Yeah. But brands like Garmin are a joy to work with. So we do a lot of co-marketing with our what we call our gold brand partners, of which Garmin are one. So we use a lot of their collateral. We co-shoot content with them. We work with influencers. We're increasingly a bit of a content hub, which is important in that market. So last year we saw 100% year-on-year growth in Garmin.
Wow.
So smartwatches is a big growth area for us, and luxury is going to be important too. More in the 500 to 5,000 category.
Brilliant. Now, when we spoke, I think it must have been 2 years ago when you were on our podcast, you were talking about your strategy of not just being a retailer, but being a platform where brands could use you as their e-commerce operation, sort of a marketplace platform kind of thing. Just tell us how that's gone and whether that's how you'd characterize yourself now.
Yeah. So one of the reasons I joined the business is that I thought the technology had a lot of potential. So we have got an in-house tech team, and we've built our own end-to-end e-commerce stack. So the website, the warehouse management system, all of the order management around that, it's all in-house on a fully integrated stack. So what we spent quite a bit of time doing is building that out. So we've productized it so we can offer it to third parties. And I know this is a theme generally you're seeing people like Next doing it with Total Platform. But what it means is that we can plug into another website at any point, be it to white label the front end or a basket to fulfill from our warehouse as a dropship model. We're pretty flexible like that. So our first foray into it was last year with Debenhams. So we're watch shop at Debenhams, and I guess soon to be watch shop at Debenhams at Boohoo. But that's been a very powerful model because effectively you're just harvesting somebody else's traffic. So we don't compete on digital marketing or above the line, but what we do give them is a much better range than they could otherwise have, and a much better fulfillment promise actually in terms of next day delivery. So the customer offer and promise is better. So we significantly improve sales for Debenhams stroke Boohoo. So we are in conversations with other retailers and increasingly, I guess, brand marketplaces. So I think this is part of a more general trend where you're seeing, like ASOS and Boohoo buying up brands to add to their repertoire of what they do, because it's a very efficient model. You've already got your existing traffic coming through, and you simply convert it more often and more frequently into other brand areas. M&S are doing it too. So we're having a number of conversations with other faces about doing that for them.
But you're not just a marketplace or a supplier to marketplace, because you're running branded stores for the watch brands as well. Is that right?
Yeah, so one of the things I think there's been an important trend in our sector has been, I guess, the differentiation between what Amazon does and what the rest of the market does. So particularly in our sector, Amazon is a place where you'll find a lot of grey market product, a lot of old product. Nothing wrong with that, but it's not the new, it's not the core stuff. And so it's a price-driven market to clear out a lot of older stock in general. But what the global brand partners want to do is have their product presented in a premium way. So a brand like Tommy Hilfiger that's paid a lot of money to a young artist like Zendaya wants to make sure that when the customer sees that product, it's presented in the right way, not just on the website, but throughout the funnel in terms of how we're showing them on Google, Facebook, Instagram, Pinterest, etc. So we are a premium partner for brands to do that and maintain their integrity, not just of their product, but of the way their brand is portrayed. And that enables us to sell more full price products for them than they otherwise would be able to. So it's a very important differentiation that we offer to, I don't mean to be unkind about it, but more of a commodity marketplace.
So you're really maintaining the brand position across social content and the service experience as well. So
exactly.
Interesting. Now, we've touched on you being a bit marketplacey. One area before I let you rest is Brexit and cross-border.
Yeah.
So a lot of the brands are European. The traffic you'll be getting will be pan-European. As the dust settles on the politics, how are the practicalities of being cross-border? How's that panned out for you?
Yeah, so we fulfill internationally to 75 countries. We've got 7 EU sites, and we do supply the EU through our fulfillment. We obviously Brexit came very late in the day as to exactly what it meant, and what we found in the first month, I think is what everybody's found, is that customers in the EU were being double charged for VAT and duty on receipt, and so a lot of unhappiness around that. Our carrier, who I won't name, was offering us a delivery cost per order of £26 into the EU, which obviously from a customer point of view, when they've been used to being charged about 4, it's a big hike. But I'm pleased to say that we're about to integrate with a European provider where, and this is you've seen this come out quite a lot. So the Dutch and the Belgians have cornered the market in here. So we'll deliver into Belgium, in our case, to a single carrier, and they will fulfill from Belgium to the rest of the EU, and that will be a cost of about £4 to £5 an order, which is competitive. So it's definitely a solution for us to be able to carry on trading in the EU, except if you live on an island. If you live on Malta or Cyprus, we can't serve you.
All right. Well, let's hopefully that ERA and Northern Ireland will, still be within swimming distance.
Exactly.
Robin, thank you so much for that, and I'm sure we'll come back to the Europe practicalities in another session. But do stay with us because we're going to switch focus now. Speaking of locations, to Matt. So, Matt, when we first met, it was in an office next to a river that was about to be flooded, I think. So we'd come to see you in rural Worcestershire or somewhere. And I remember you just telling us some incredible stuff about the phenomenal data you hold, way, way, way beyond postcode and routing and so on. So we're very pleased you could join us today. And you're going to give us a quick run through on some research you've done. So I'm going to let you throw up your presentation while I burble, because talking and clicking share is never fun. So you're going to talk us through some of the traffic and changes you've seen over the last few months in this very weird period. And then also towards the end, pick up on my favorite topic, which is the enhanced data. So Matthew, I hope I haven't butchered what you're going to say. I'll just hand over to you and we'll talk through it.
Thank you, Ian. You've signposted it perfectly, so thank you for doing that. So real quick on just a little bit of context about Loqate, if you don't know who we are. We're that, I think, clever little bit of tech at the back end of a checkout that enables customers or consumers to enter their address really quickly into a single field, and so slick and convenient they probably forget they've ever done it. But it's there's a lot of kicking below the surface, but a lot of simplicity at the checkout. We do that for almost 15,000 customers, of which a large percentage of those would be in retail and e-commerce, but across a variety of sectors, including charity and automotive, and some of the areas that haven't done so well, travel and hospitality, but we look forward to them picking up again, and just some of the brands that we work with below. I could add to that Watchshop. So very proud to work with Watchshop, and about 40% of our clients will have some degree of cross-border trade. So given the fact that we can support them in pretty much all countries worldwide, then we do a lot of work with customers cross-border. And the purpose being is that it creates a nice slick customer experience so that you get more conversions. That's the why people work with Loqate. Let me try and get to the next slide. I just added this slightly butchered cut and keep from the Times last year. I don't know if you read Esther Walker, otherwise known as Mrs. Giles Corran, I think, but they write together in the Saturday Times, and she wrote a little piece. It's October time last year, these 16 tiny things that make me happy. And I was reading that one Saturday, and suddenly I sort of fell off my chair that she included us in her 16 tiny things that make her happy. And I think I couldn't put it better myself, really. I think because we're all consumers as well as working in this industry. But she, I think, spoke for many people that when she comes along and wants to check out and buy something, rather than go through even a semi-convoluted process, the idea that you can just intuitively just start typing where you live, and that, well, for a few keystrokes, Loqate is able to complete the address for you and save you time and give you that confidence that the correct bit of information has been captured. So I was thrilled.
Yeah, so Matt, we all take this now for granted. There's a part of me that wants to believe that you just buy the data from the post office, polish it a little bit, and then snooze for the next 6 months billing everyone. It can't be that easy. What did it actually take to maintain this data in a joy-giving status?
Well, I think to offer that level of joy that prompted Esther to write this in the Times, just I think reinforces that under the surface, as you say, there's just a lot of data that's being queried. So you're right, anyone can go along to the Royal Mail and get their postal address file. If you were to add to that information about newly built addresses, if you were to add to that information about multi-occupancy addresses, add to that point of interest and places data, you start to build up a richer and richer data set, which people like you and I can then magically just find our address or the location that we want something to happen at or to be sent to. So some of this is creating just smart technology, which looks and feels like the sort of thing that we want to do online. A big part of it is aggregating just huge amounts of location data. So to the consumer, it's just a very seamless and quick process.
And if I were to put you on the spot, and given I don't know the answer, you can more or less tell me anything. But if you look at the level of bit rot or how quickly the data needs to be replenished, would you say that on a monthly basis, 10% of it needs to be renewed, 30%? What's the sort of attrition rate of data if you take your eye off the ball?
Yeah, so I know a statistic that we publish in our data services or data maintenance part of Loqate is that around about 20% of customer data in a CRM system will decay every year, and that won't all be because the address data has changed, but in the UK there's a rolling process of repostcoding and newly built properties, and obviously people move and don't always tell you, so reconnecting with those customers. So around about 20% data decay, and a chunk of that will be around addresses changing in some shape or form. So keeping that up to date is a really critical part of keeping that connectivity with your customers.
Great. Okay, sorry, I interrupted you. Do carry on.
No, not at all. So just a little bit of a look back before we look forward. So with 15,000 or so customers, many of whom are in retail, this was kind of the view across 2020, and the shape of this chart will look very familiar to most of you, and you've probably seen other charts that look similar, with the enormous surge during the first March lockdown, bit of a lull during the summer when we could go out and go to the pub and sit on the beach and do other things. We were really interested to see what was going to happen at the beginning of what we might call the golden quarter. So thinking about our US business and European businesses is the lead into Thanksgiving, see Black Friday, Cyber Monday, and then on into the Christmas holidays. I think what Robin alluded to was we saw a pretty fast start to that golden quarter, to the holiday period. And it's consistent with, we'd run some research in the US and the UK and in Europe around customer sentiment, how people were going to behave, or they were planning to behave during that golden quarter, called, the research was Holidays Unwrapped, which anyone's welcome to have a copy of at loqate.com. So we could see there was that consumer sentiment that folks were often saying they were going to start early. So September, October, we saw a lot of traffic running through the platform that we hadn't ordinarily expected. And then we saw obviously a massive spike of aggregated traffic going into and through Black Friday and Cyber Monday, staying pretty high on through December, and then obviously dipping again just before Christmas. Our figures include online grocery. There's quite a number of grocers that use Loqate, so that's slightly different then to non-grocery. So just breaking that out into that, the actual peak period, you sort of see the shape of that a little bit better. So a fast start into October, and then really spectacular peaks into and across that Black Friday weekend across all sectors. And bear in mind, we serve not just sectors that didn't do so well last year, so fast fashion and others, but home electronics, house and garden, and other some grocery, which were performing just spectacularly well through particularly the lockdowns, and then right over that Black Friday weekend. And some of the numbers we saw and were tracking across our systems were unexpected and quite spectacular. And
does this include some newer players, maybe food delivery or service-based companies, who all now seem to have the web, whether it's mobile or desktop, as their main sort of business frontage? Are you seeing a growth there that you could quantify?
Yeah, definitely, and some of that will be anecdotal and in discussions with customers, and obviously seeing who was performing and who wasn't. I tried to spend most of last year not thinking about winners and losers, because it felt horribly binary. Bear in mind, organisations or retailers that weren't doing so well, there were people that were suffering. So, but I think in terms of what consumers were going after and buying, then things that made life at home more bearable, treats as money was being accumulated and not being spent. Home delivery of food, absolutely, that's a great example. Home delivery of grocery, things to make your homes more comfortable, sporting equipment, garden equipment. They were all the trends up during the course of the year. Generally, yeah, things that related to summer holidays, fast fashion were. No one seemed to be buying shoes last year for some reason. I'm sure we'll all need some new shoes at some point, but footwear was well down. But on aggregate, the peaks certainly created much greater peaks than we'd seen in previous years. Unsurprisingly, given for a lot of the year there was no option other than to buy online because the shops were shut.
Yes, great. Thanks, Matthew.
So I think that just led us to, there's probably 1,000 things we could think about to share, but kind of 3 just theme areas that we've been talking about with our customers and partners. Some of this based on research that we've commissioned over the last few months, both the Holidays Unwrapped research, but also something that we're about to publish, fixing failed deliveries. I think the first of those was what we sort of call the new wave of online shoppers. They came online because they had to for parts of the year. Now we want to make it easy for them to stay. And again, I think Robin touched on this earlier, that lots of people came and shopped online last year because they had to. They're under duress, no other options. Some of those were already experienced online shoppers, others weren't. We kind of tagged them last year of Generation Zoom, named after my 83-year-old dad, who we managed to get onto to Zoom to chat to us every week. Even he started buying things online and actually found it to be a convenient way of shopping. So we're going to see more of these sort of newer shoppers coming in. And again, I think some of the brands, sadly, that didn't survive the last 12 months or so, early on we saw Oasis, Cath Kidston, Warehouse, more recently Debenhams, the Arcadia brands, where the online brands are being acquired, kept online, or in Debenhams' case, as a marketplace, but not the high street. Some of those brands we could say would have had a naturally more kind of bricks and mortar demographic to them. So you're seeing shoppers coming online that may not have been accustomed to that activity in the past. So we'll repeat it, just make it really, really simple. Simplify, declutter, make it easy to check out, make it easy to choose. Because if you do, you're going to sell more, you're going to convert more, and it builds trust. And we saw our research that people trust you more if you're making an effort to capture their data accurately.
Yeah.
I think that leads naturally into the delivery. If we buy something that we want to have delivered, then we've got high expectations. They talk about that double dopamine hit with e-commerce. You get one when you buy it, and the second when it's delivered. And if there's a problem with delivery, the low can be lower than the highest high. So delivery around, we've touched on post-Brexit cross-border delivery. That's creating issues clearly, but having the right delivery information is part of the solution. But again, we saw a trust factor there, that if you, not necessarily, we saw in our research that not all consumers are obsessed about really quick delivery, but they do want delivery to meet their expectations or the agreement that you've made at the point of purchase. So
and increasingly communication during the transit as well.
Absolutely. So the consumers tell us that they'll lose confidence in brands that let them down. It was probably more of a feature of the holiday period, but that third point there in the middle section of 43% of shoppers would be unlikely to shop with the same brand again if they let them down, particularly with a gift, if it didn't arrive on time. So the implications are pretty
actually, because I'm going to move you on to my favorite point a second, just saying that when we send out the post-webinar update, I will make sure to put a link in to these reports so you can get those. Matthew, just because time's running short, just tell us about the additional data that's being used around postcode.
So I think that in the UK, the great thing about postcode is it's just a great key. It's just to attract lots of other geospatial data, which has huge value and potential. So a property, 72 Acacia Avenue, it's an address we can mail to, great, tick. But if we know that it's a 3-bedroom semi-detached house, perhaps more likely to have a family rather than a single person or a couple, it has a garden front and back, it has proximity to fields or playing space or near a beach. There's so much about that property that you can start to use, both to get a better understanding of what that family or that individual might want to buy from you, but also some of the risks associated with that property that, again, they might want to address or to think about in terms of their buying behavior. So you mentioned coming to our office in Worcester, right by the river, which constantly floods. So from an insurance perspective, it's good to know that you buy a river or a watercourse because it's a natural hazard. But all of that geospatial information that attracts to a humble postcode kind of opens up these really exciting ways to get to know your customers, both at the point where they first interact with you, but building that relationship over time, making it really relevant and real to them, and being able to do more exciting things with them over time.
Brilliant. Matt, I'm going to have to curtail things there. Very interesting. Thank you for covering off all of that. And in particular, as Ilko fires up his presentation next, I'm really interested to see how that additional data is being used. You've seen, we did some interviews recently with Tesco and the Co-op, who are all talking about using data to work out, where people are who might be sheltering or changing delivery routes. So it's great to see that data being made available. Matt, thanks so much. Now, Ilko, let's just switch over to you. I can see your screen is up, so let's dive in quickly and I'll just hand over to you.
Perfect, and then I'll talk a bit about the payment side of things. So I work for Nuvei. Quick introduction on who Nuvei is, because to a lot of people, it's still a relatively unknown business. That is because until sort of last year, they were predominantly active in Canada and the US. September last year, we went IPO at Toronto Stock Exchange. And after that, there were a number of acquisitions, and also ramping up to the IPO, there's been a big acquisition of a company called SafeCharge, which is more known within the European market. We process on an annual basis over 500 million transactions, worth a bit over 40 billion in total value. We offer a wide variety of different payment methods across the globe, 450 at the moment. We can accept payments in 150 different currencies. And by now, I think this slide is already a few weeks old, we're getting close to 1,000 employees globally. So as you already mentioned, I'm working out of Belgium, but the majority of my team is spread across Europe, and even some in the Middle East, in Israel. So payments and e-commerce. I joined the payments industry, I think back in 2011, when it just passed the 1 trillion mark in online revenue. And since then, it's grown well over 500%. So we're going over 5 trillion in overall volume, of which
this is where everyone gets really depressed because they're thinking, "Oh, I've only increased 200%."
Yeah, this is global, right? So I think in the Western European market, we've seen for the past years the growth numbers and percentages are getting flatter. But then there are markets in Latin America, Southeast Asia, which are still growing well, south of 50% year on year. So some of the trends, and this is also first one is to Robin's point, and something we see across, especially within retail, the rise of marketplaces. Over 50% of all e-commerce purchases globally happen on a marketplace today. So from the numbers we just seen, round about.
Again, just tell us how you're defining marketplace here. So would Robin fit into your definition, or are you dealing mainly with the ones that are, hey, I'm a marketplace like an eBay or
depends. Depends if you ask me as a consumer or if you ask me as a payments professional, because the card schemes and financial institutions have all sorts of rules around what a marketplace is. And that has to do with who carries responsibility, merchant of record, those type of legal things. But as a consumer, it's quite easy. It's where buyers and sellers come together. And that can be someone that owns a multi-brand type of store, but it could also be a platform where consumers sell stuff to each other, the likes of eBay and Marketplace, and, or Marktplaats in the Netherlands, or bol.com, those type of places.
Yeah.
But it is definitely a very fast evolving landscape, and we see some of the large international retailers now acknowledging that and starting to either make investments or start their own platforms. I think we briefly spoke about what H&M is doing. They're launching their own marketplace, and of course companies like Zalando, who well, I wouldn't say invented it, but they've been around for a long time, been very successful and operating this way. Another thing that we see a lot within specific to payments is leveraging transaction optimization innovations, because the growth in sort of more developed markets like the US and the EU is becoming less. I think conversion is becoming increasingly important. So you want to convert as much of your consumers coming into the checkout experience, and also to Matthew's point, a lot of points go into that, but the payments are definitely an important part of that. Multi-acquiring, so where when I started in this space around about 10 years ago, it was very common for businesses to have all their eggs in one basket. They had one provider who provided them with everything. Now with the market maturing, you see that a lot of different businesses have sort of a multi-vendor type strategy, and that also plays into the next point, which is payment orchestration. We've seen a lot of new entrants to the market in the past 5 years that really look into payment orchestration as having an additional layer, or a layer on the customer side, the retailer side, that actually allows very easy switching of traffic, switching of provider, switching between different payment methods. So really adding sort of a orchestration layer.
So let me be clear about this from a consumer perspective.
Yeah.
I'm on a website, I don't care what it is, I'm just interested in it. I go to click buy, and this multi-acquiring, is this where I would just see every payment mechanism under the sun including locally relevant ones to me or device specific ones, and I can just pay any way I like. Is that where the consumer sees the benefit of multi-acquiring, or is it a bit more behind the scenes that I wouldn't notice?
It's a bit more behind the scenes that you wouldn't notice. So I think any successful online store really targets their consumers in a way that they offer the relevant payment method. So in the old days, you got a full list of payment methods that are absolutely not relevant to you because you are not in a market where you can use that payment method. For example, you shop in Germany and you get presented with Ideal, which is typically to the Netherlands. Those type of things have now really gone away, I think. And what sort of multi-acquiring and payment orchestration does is it routes the traffic in either the most cost-effective way, the way that will get you as a retailer the highest conversion. So you can have different parameters in which you route the traffic. But this is something that very much happens in the background. Important for you as a consumer is still that you get those relevant payment options presented to you.
And we're talking about marketplaces. I'm just going to focus this for a second because we track about 700-800 billion web visits a year to our top 1,000 European retailers, and just over 50% of all consumer visits are going to a marketplace now. So this is up from about 43%, when we were looking at this a couple of years ago. We're also seeing massive growth to brands' own sites. That's now gone through 20-something% as well. So the bit that's being squeezed in the middle are the retailers, or things we used to call retailers, between the brands and the marketplace. So we're really looking at liquidity and gettability as key things. But for those people who are looking at marketplaces, what are the payment challenges in a marketplace that you're able to solve that maybe wouldn't be obvious to anyone who's saying, well, just stick a basket on there, what's the problem? But, what is the marketplace challenge to the retailers, to the marketplace owners?
The biggest challenge would be is that there are usually a wide variety of different buyers and sellers. So with any direct shop, you have a wide variety of different buyers, but there's always one seller. When you have a multitude of different sellers and you have a platform in the middle that takes a commission as well, things like split settlement, part of the commission needs to go to one party, then another one needs to go to one party, then there's shipping involved that probably needs to go to a third party. Automating that process and allowing that process to happen without involvement of the actual marketplace, so in automated fashion, that's the real challenge. And that's actually why our company acquired a business called Smart2Pay, a business ran out of the Netherlands, which really is sort of the pioneer when it comes to marketplace solutions, and they specifically built an entire ecosystem and solution tailored to marketplaces.
Excellent. Thanks, Ilko. Sorry, I interrupted your flow there.
No worries, no worries. International expansion, I think now more than ever, myself as an example, I'm being in Belgium, of course, by the nature of the industry that I'm in, I've always been shopping online, but a lot of people around me haven't. So Matthew just talked about his father as an example, but I think it's not only sort of that generation, it's also entire countries who are not that much into buying online or haven't been before COVID. We've seen massive growth percentages coming out of those markets because there was, at a certain point, there was no choice. And also to echo Matthew's point, I think the next challenge is to make sure that these people continue to buy online and that life is made easy for them. So how do we do that? Well, we try to always look at how can we optimize. There's within the payments industry over the past few years, everything is around optimization, making small changes, small tweaks to try to increase your acceptance rate or your conversion rate with just a few percent overall. Localization tools, so we just spoke about it. Very important when you come on a specific website as a consumer using an IP address or having a card from a specific region, just present the payment methods that are relevant to you. Recovery tools, so making sure that whenever a certain payment method doesn't work or you don't have enough balance on your credit card, you get presented a different payment option. For example, that's where Kevin and Klarna come in. Then acceptance tools, and this is something also quite unique to Nuvei. We offer something called partial acceptance. So where you have, for example, partial authorization, where we get the notification back from a card issuer that the consumer only has 15 euros on their card. They're trying to buy something worth 30. Then you can either lose that consumer or you can try to offer them a product that is 15 or try to capture the money that they have to spend.
So I love this, but again, I'm just thinking about the orchestration here. So when you're getting the payment, obviously, you know the amount you want to authorize. So you need a real-time connection to whoever's authorizing it. The data around, sorry, they can't afford that watch, but they've got this amount. Then you need to be able to get back to them with a message. That's a lot of data back and forth happening very quickly. How, as a retailer, do I integrate that? Do you handle it all and just say, you've got 15 euros, go back and shop again? Or are you able to suggest, you're looking at this Garmin at 500, but I've got this one at 250? I mean, how involved do you get with the suggestion merchandising rules of the retailer?
We can offer both flavors, but usually this is something where the retailer wants to have control. Because as soon as we start to give them amounts, and that's usually a lot less powerful than when they present a different product. So our preference and what we've seen from our data delivering the highest conversion is when people get offered a different product and not the amount. Because 9 out of 10 times they know the amount, or they've forgotten about it, but they should be able to get to that point. So really offering a different product, and that's where we really work with our retailers to make sure that their inventory system is sort of well connected, and then that they have suggestions and automation around those.
Lovely. Now, again, it's naughty of me to put you on the spot, but this is something people are going to want to look at more. Do you want to pick someone you think is doing this really well, one of your clients that we can all sneak off straight afterwards and go and check it out? Who would you say is doing well?
Well, it's not specific to the retail sector, but we have seen some really good examples of this. For example, in the travel and in the transportation sector. So with Get Taxi, for example, which is a big customer of ours, who actually use this also to sort of a pre-authorization as soon as they start driving, because the biggest risk for those type of businesses is that you run out of money whilst you're getting somewhere. So I think that is a company that really done well in looking at.
I'm seeing a new partnership where I get in a cab, realize I haven't got enough money, and then you get data from Matt to either throw me out or take me to a cash point. So that's great. Anyway, sorry, carry on, because I'm delaying us when time is ticking by.
Exactly. And aware of time, I'll hand over to Kevin now.
Brilliant. Ilko, thank you so much for that. And if you do think of any examples, just let me know afterwards, and I'll include that in the follow-up email, because there's nothing nicer than having data that turns into revenue. So thank you very much for that. Now, you did mention that you work with Klarna. So I know Kevin's going to give us a quick reminder of who Klarna is, because all over the news at the moment, which is great. But I did hope, Kevin, that you're going to pick up a bit on in-store as well and bring us, if you like, 360 degrees around to link the digital back to the store. But I'll let you hit your presentation and just take us through it, please.
Oh, thank you. Can you see my screen?
Yeah, we can see your very posh animated one. So showing off here.
This is very Klarna, as you guys know. I mean, I suppose these days you probably have to live in a cave or under a rock not to have heard of Klarna, but I was just actually joking offline with Matt that a couple of years ago when I first joined Klarna, I actually had to spell out our name to prospective clients and panels, etc. So I think that gives us an understanding of how far we've come, because I think everybody has heard of us globally now, which is fantastic. So if I have a little look at sort of our key points, I think the overview for this slide is that it's all about our customer ecosystem and that customer preference and driving that consumer preference. And, you know, these slides are all well and good, but actually it's all about what does it mean for the end customer and the retailer as well that are trying to sell. So we have 90 million shoppers at the moment globally, with transacting over 2 million transactions a day, 25 million app downloads, and with 200,000 retailers globally. And, you know, really, really important stats, because the whole premise of Klarna is that every one of our customers around our merchants are spending more often, and they're converting quicker as well. So that's why it's important that our ecosystem continues to grow, because we want to create that ubiquity across the marketplace where a customer can start their buying journey at Halfords, for instance, and become a Klarna customer and enjoy our products around the plethora of UK merchants that we have on board. So they then might buy in beauty or sports and outdoors or fast fashion, etc. So really, really important that we grow that ecosystem.
Now, Kevin, I just saw 90 million and salivated. So if I was just starting Internet Retailing T-shirts Limited, sign up with Klarna and think, you know, Kevin, mate, I just want to market at those 90 million. I mean, that is one heck of a customer base where you know what they spend, where they spend it. Can I market at them, or are they your clients? How do you use that 90 million for my benefit?
Yeah, that's a great question. I think that what we love at Klarna is that we give everybody the opportunity to drive into our ecosystem. So yes, if you're Ian's T-shirts right up the way to, you know, Boohoo or Farfetch or whoever else, you know, you have the opportunity to market to our ecosystem in a number of ways. So through our social channels, so we've got a huge following on Instagram and Twitter, etc. We have our shops on our website, and we're currently seeing around 2 million clicks out to our retailers per month. And why that's really important is actually we can track that, you know, from a data analytics perspective. So we can actually tell our merchants how many customers have been driven from the Klarna ecosystem, how many of those customers bought, and what the AOV they bought at was. So when they then have a look at that data themselves versus their credit or debit card data, they can see the uplift for themselves that we are driving as a proposition for them. And that's why it's very, very important. And I think, and then finally, in like the last part is through our app downloads. So 25 million app downloads is phenomenal. And across the Christmas period, we were up there with Amazon and eBay as the most downloaded shopping apps globally. So, and why that's important is because ultimately customers through that channel tend to spend more and spend more often than just going through the retailer's website. So if we are driving that customer acquisition to the retailer through our app, that customer is a much more loyal customer than we see anywhere else. So really, really important that sort of grows. And I think the most important stat on here for me is that we have 1,400 engineers. So, you know, what I do is easy, selling this wonderful brand and our absolutely world-class proposition. But actually it's the engineers that take the friction away from all of the proposition. So, you know, like Matt was talking about earlier, the second that a customer these days is faced with any sort of friction, they just log out of the process. So we have to make sure we're giving them a world-class proposition, and any of the partners that merchants are looking to partner with need to elevate their brand. You know, that's really
good. Great. Thanks, Kevin. Carry on.
So just a quick one on this. Really, the most important part of this is around our demographic mix now. So you can see in the little square below the 90 million, you know, we've got 55% millennial. But something that was really interesting around lockdown and alludes to everybody's points, and like, you know, Robin and Matt mentioned it as well with their age demographic, what we're seeing is Gen X is our fastest growing demographic by some distance. And that comes into the fact that I think, lockdown, COVID plays some part of that. But also as a business, as you know, we started our sort of journey in fast fashion. And actually now, we've really, really diversified across all of the potential verticals you can think of. So you've got customers coming in, making their first purchase at maybe Arnold Clark Superstore for a car, if you like, and then actually coming into all of the other brands that we're more synonymous with as well. So, really, really good growth from different demographics.
Mm. And so with the average order value of $160, you mentioned a car dealership. I mean, what is the biggest number you see going through? I mean, do people literally put a whole car on, or is it mainly, because 160 is a non-trivial basket size?
Yeah, absolutely. So 160, I think, versus credit and debit card across our across our whole ecosystem is normally between a 20 and 40% increase in AOV. So that's really where we sort of drive our proposition. We don't particularly sell cars per se, but we do like the servicing, etc., through some of those companies. And I think where we do well as well is in the watch industry. For instance, we might go up to that £5,000-6,000 and play in that sort of area. But outside of that, we leave that to the traditional retail finance companies.
Great. Okay. Thanks, Kevin.
And then looking at our core markets as well, I think one of the key things with Klarna is that it's one integration once, whether that's through our partners, partner network or directly. So if you are a US, UK, etc., domicile retailer, and you have those touch points around the globe, we can service for you in all of the local currencies, and also our proposition flexes to that region as well. So like, as we know, Germany, we own Sofort. So essentially, we can pay through that invoice system, and around 45% of all transactions in Germany in the e-commerce space are coming through Klarna. So it can actually be said that if you're not using Klarna in Germany, are you in Germany properly? That's a question a lot of our retailers are asking themselves at the moment. And then on to marketplaces, Ian, because I know that we've touched on this a few times, and I think this is a really important point for us as well, because the key thing with marketplaces and Klarna is that, we are, again, creating that ubiquity. We are giving our consumers access to as many brands as possible under one roof. And if we take Farfetch, for example, absolutely market leader in the designer sort of area. And we do deal with a huge amount of their merchants and retailers directly as well. So customers are then essentially being able to look at stock directly and look at stock at Farfetch to make sure that they are getting that sort of full view from that retailer. But I think what's really important for us as a business as well is that there are probably another few hundred retailers on Farfetch that we aren't dealing with. So it enables us then to go back to that retailer and say, hey guys, we're doing great things with Farfetch. This is what Farfetch is seeing. And by the way, your brand on Farfetch, we're seeing an average transaction value of X. What do you guys see on credit and debit card? And ultimately that is really proving that point for that retailer. And now there's an expectation that alternative payment method, and especially Klarna, is there, because the expectation now, Ian, is around our ecosystem. When you've got 90 million customers and 12 million of them are regular customers in the UK, we are getting to the point where a customer expects to see Klarna at checkout. And if they aren't, this is going to affect the buying decision and conversion.
Cool.
Yeah. So that's it from me. Just short and sweet.
And just you did mention earlier on when Ilko was talking, just the handover that you work together. So I'm just thinking this is yet another layer of complexity. If you've got multiple people that need to be paid in a given transaction, then maybe the slice 3 payments, maybe refunds. So do you and Ilko collaborate? Is it all seamless for me as the marketplace owner, and you just sort out all of those flows and interaction?
Yes, there are two options, Ian. So essentially you are either a merchant of record. So for instance, the partner or the payment company would be our customer, if you like, and we would settle to that company. And then that company would settle out to the merchant, so they handle everything on their side. Or the second option is that we integrate with that payment service provider or platform, and we directly contract with the retailer. So we would then handle the retailer's payments on Klarna side of things, if you like, and any returns or fraud, etc. So yeah,
Right.
there's definitely a divergence in the model. And to be honest with you, as far as I'm concerned at Klarna, it should be the quickest route to market we should be looking for, because we're doing it in such a way where the customer sees a world-class proposition, whether it's a merchant of record or whether it's direct to the consumer.
Yeah, brilliant. Kevin, thank you for taking us through that. So look, we've had quite a journey hearing from Robin, which is great. We've done location, data, understanding how that reduces friction. We've looked at marketplaces, and in particular, I think the favorite thing of the day is going to be going back with suggestions to save the sale. Just love that, Ilko. And then Kevin thankfully brought us back to marketplaces, along with some of the phenomenal growth and customer reach. So, gents, thank you all very much. I'm a rubbish chair because we've gone ever so slightly over, so I will I'll have a harsh word with myself in my appraisal later, but I do appreciate you spending time with us. Also, before we close, we had a very good question from Andrew about delivery rates, which Robin's kindly answered. So that is in the session Q&A in case anyone's interested about duty levels, double VAT, and to the carriers. So Robin, thank you very much for answering that. So all I have to do is thank all of our participants for giving us your time this afternoon. We will drop you a note with the follow-up we've promised. And a final plug from us is March the 1st for a week is going to be our World E-Commerce Week with 15 webinars covering our sector reports, our country reports, and a few technology developments. So I'm just going to ask Addison, our head of marketing, to put a link to that into today's follow-up, and we very hope we'll see you there. And the final request is just to tell us what you'd like to hear more of. I've never heard anyone say we need more webinars in our life, so we don't want to do just any old webinars. We'd like to pick up on things of interest to you. So either drop me a note, ian@internetretailing.net, and tell us what you'd like, or hit reply to any of our mails. We would love to hear from you. So all that remains for me is to just thank our panelists once more, and to say I'm about to hit the magic end button, and that'll be an abrupt goodbye. So that's all there is to it from us, and the ending is coming now. Enjoy the rest of your days. Thank you, everyone.
Thank you, Ian.